This is the quick start guide for the Excel Skills Property Investment Forecast template. This template enables users to calculate a comprehensive residential property investment forecast for any property investment or primary residence over any investment period between 1 month and 20 years. Let's start with the input values. So on the input sheet, there's a number of input values that you need to specify. So the first is the property purchase date and property purchase price. You also need to specify the deposit amount and the bond period. If the entity is VAT registered, you can click that checkbox, and if there's any initial renovation costs, you can enter that value there. The second part of the input values is for transfer and bond cost. You can enter your own in the yellow cells, or you can just leave the check boxes unchecked and use the default values that are calculated in the template. For income, there's monthly rental income, occupancy rate, annual rent increase, and if a rent subsidy is appropriate, you can enter the amount and the period. Operational expenses, you have a property management fee that you can specify a percentage of the rent, and then annual expenses for rates, municipal rates, levies, repairs and maintenance, insurance, and any other annual operational costs. You also specify the operational cost inflation percentage, how much these expenses increase year on year. Then there's a selling costs section where you can put in your agent's commission and any other selling costs. And if a bond cancellation fee is applicable, you can enter that as well. The second last section is for the enterprise details, where you can select the entity form, individual or corporate, or a close corporation or trust, and you can the effective income tax rate and the effective capital gains tax rate comes from the variable sheet. The last section for other is a checkbox for primary residence. There's some tax implications if it's a primary residence. So there's a checkbox for that, and then you've got your investment period and a discount rate. We'll get to that shortly. Okay, so that's all your input assumptions on the input sheet. Then the second sheet is for the prime interest rate. You enter your monthly prime interest rate on this sheet. The next sheet is the ad hoc repayments. So the bond repayments or the home loan repayments will be calculated based on an amortization table. If you have ad hoc payments that are made on top of the required bond repayments, you can enter those on this sheet. The next sheet is the monthly amortization table for the home loan. Everything on this sheet is automated. The only user input that you require is if there's a discount on the prime interest rate, you can enter that discount value here. So say your prime rate is 10% and you have an interest rate of prime minus 1, you would enter 1 here. Okay, so the interest rate is then determined based on this rate discount and the prime interest rates that are recorded on the prime rate sheet. Okay, so the next sheet is your cash flow sheet. So the only user input required on this sheet is the annual capital growth rate, which can be entered at the top of the sheet. That's basically the growth in the market value of the property. So the market value and outstanding bond. The outstanding bond amounts will be determined based on the amortization table, which will give you an equity 1 value. in terms of the operating costs, and also your transfer costs will be included in year 0, and then your year 1 to however long your investment period is will be included here. And that's all your income and expenses, also your income tax and your bond repayments. And then your selling costs will only come in at the end of your investment term. So there you have the selling price, all your selling costs, capital gains tax, and so forth, and that will give you a total cash flow for each period. We then use that discount factor, which is usually your inflation rate. We use that to discount your cash flows to a present value. So that's basically for a net present value calculation. The next sheet is the result sheet, and on this sheet all the calculations are analyzed, and we have a few calculation methodologies that are used to express the investment return. So we start with cash flow from the cash flow sheet. Then we have the equity 1 calculation, which is basically your market value less your outstanding bond. We then deduct selling costs and capital gains tax to get to an equity balance. There's also an annual and a cumulative net profit or loss, and then we get to the ratios. So the ratios, you have an annual capital growth rate, which is annual and cumulative. We have the net present value, which basically expresses whether an investment is positive or negative in terms of net present value. If it's positive, it's a good sign. Then we have internal rate of return, which basically is a cumulative investment return percentage over the entire investment period. We have a return on equity, which is an annual return on the equity invested. And then we have rental yields based on market value, property purchase price, and the outstanding bond amount, both on a gross and a net basis, and just some other indicators like equity in relation to market value, percentage of disposal cost, your outstanding bond percentage, and your cumulative profit. So there's a lot of investment results here, the most important being probably the internal rate of return and also your return on equity for measuring your annual investment return, IRR for the overall investment return. So the last sheet is a variable sheet. This is used in some of the calculations. So the transfer costs, the transfer duty, conveyance fees, deed office fees, and other transfer costs are used in determining the initial transfer and bond costs. There's also other bond costs and initiation fees, and then some tax rates. So basic tax rate for individuals, corporates, and trusts, and then capital gains tax inclusion rates for individuals and corporates, and primary residence exclusion rates for capital gains tax purposes. And that's basically it. So if you want more information on these calculations and maybe a better explanation of all the different investment return methodologies, please view our detailed instruction sheet. You can also visit our support section on our YouTube channel, where we post videos based on customer feedback.